Well, thanks for tuning into BQ Prime and its continued coverage of the World Economic Forum at Davos. And it's our final interview for the day with none other than Vijay Shekhar Sharma. If you follow him on Twitter, I'm sure a lot of you do, you would have seen how proudly he flaunted the India presence on the promenade. I tried to do that too, Vijay. You did it slightly more successfully than me. But thank you for speaking to us.
Thank you. Thank you for having me here.
No, the pleasure is ours. So, firstly, I mean, you're a veteran of Davos as well. Is the chatter around India a lot higher this time around than what you've seen in the past, and why so?
It's overwhelmingly higher. Overwhelmingly higher because it seems that not many other countries have participated, or not so much of excitement in the world beyond India in a sort of, let's say, recession versus, the growth economy story. And then one thing that surprised me is something else. Nobody's talking US. I think it is even more than India is more because we are there, and as a volume of people and number of let's say promenade presence, etc., are very good, and we are the country you would be talking. But what surprised me is that nobody's talking US.
Even in the sessions?
Even the session. I mean, there is no US story here.
Why do you think that's the case?
Less people probably. They've started to recede from here, or the attendance of who's here from US. If you just count the kind of people, they're there, but how many places can they be and what they can talk?
Got it. You would have met a lot of business leaders as well as investing people as well.
Yeah.
What is it that has been asked about your business the most, Vijay, over the course of the last 3 days?
Everybody wants to know what's the lesson of last year. Because one thing that I am very happy to say, and I tell them proactively, that is that we are, in last year, we discovered the commitment towards, let's say, prudent attention towards quality revenue, and revenue that contributes to profitability has driven the profitable results in internally different categories, and overall we are hoping that we will announce profitability very, very soon. Now, this question that, oh, so what was the last year like? Oh, I get to see you here. So how has it been? You're listed. What's like to be listed? A lot of people ask what's like to be listed. And private to public is actually like a teenager to adulthood. I can say that. It's like getting 18 years later.
So you obviously had a need to list as well, but given a choice, would you rather have preferred that you were not listed because the businesses are getting discovered, so to say?
No, I mean, it was perfect timing. There's nothing wrong about it.
No, I know the timing was perfect.
Yeah.
You
So
also
I would
needed
say
to do it, but
yeah.
I'm just wondering,
Yeah, I would have
given
done
you
it.
had a choice,
100% I would have done it.
even if there was not a need, you would have still done it
I
because...
would have done it. I would have done it for two reasons. We are a very old organization. We are a 20-year-old company. Paytm is a 10-year-old business, out of which, let's say, 5 years before we got equity funding, a first round of equity funding. So now, I have a theory of 3-3-3. 3 years you discover product market fit, 3 years you figure out what monetization is, and next 3 years you start to build free cash flow, and then you go another 3-6 years. So I think we were in that 6+ year edge any which ways. So we knew that our monetization and profitability is coming forward. So for the newer investor, there could have been a dramatic growth forward in profit and revenue, which we still are clear about it, that it is what we are delivering actually in the market. We would have not expected that public markets overall globally will discount technology so much. This is what we did not expect. But this is exactly what I'm trying to say, that why would I not want to list, because the markets were sort of, inviting companies to list. There was SPAC rush, if you remember. I mean, everybody was telling us, why are you not listing? And at the same time, the company and revenue maturity was showing up.
No, so in a slightly uninitiated way, but I'll tell you why, per se, from a perspective of one, the fact that people who've listed all through the last 20 years that I've covered public markets like to ensure that the first set of shareholders make money over a period of time, which in the case of not just yours, but all the platform businesses hasn't happened, part one. Also because for Indian investors, largely, platform businesses were a completely new kettle of fish. It was still to be discovered, true value was still to be discovered, all of that. So
I would rather be the benchmark of information and a method of building a business than to another benchmark's followers.
Okay.
And in any business that we've done that, like, so if we were not listing, let's say, hypothetically, like you're saying, we would have been, I'm saying that it's like teenage going to adulthood, and I really mean it, that public market has done good to the company. I can tell you, post facto, it is even more likable factor there, and more likelihood that we would have listed. than a pre-facto, I would have said. Pre-facto, we did not need cash, we had money in the bank, and we anyways was focused on monetization. But post-facto, the company maturity comes in a different way. I don't have to talk to my team as if that this is important because we as few of us are driving. They know this is what company needs to drive. The rally together of a team is dramatically incredible when everything is visibly publicly. Earlier, not everything was visible publicly.
Sure.
Certain MIS will be visible to a certain team, not full. And certain expectations of, let's say, a board meeting would be expectation given to a set of people, but not everyone. Right now, everybody knows. So the company rallying around the mission has been incredibly fulfilling. In fact, while the year has been stressful, let's say, from a stock market perspective, like you was talking about, but as an execution standpoint, we've never executed better than before. In fact, we are the most we are in the highest performing state of our company ever existed. That is what I can very profoundly say. Not just as a business in terms of customer acquisition or expansion of platform or build up of technology. It is also revenue, quality revenue, profit, use of free cash, attention, what happens forward. Now, 2010-11, when I started Paytm as a business item, by the way, we were free cash generating company at that time. So I had raised about 67 crores rupees of equity, and we had in bank 127 crores, which means that we were generating free cash. So we were generating free cash, and that time again the team used to be differently looked at. The teammates will be looked at, will be that, oh, you are building in you're building in KPIs like EBITDA, expansion, growth, new market, which business, and that's a cycle that is coming back. I'm very happy to say that as a company, as a founder, very fulfilling feeling is when you build a business that grows, expands, finds its maturity, consolidates a position in the market, gives an opportunity of new business, grows, matures. So this is my third or fourth cycle in the same company. So for me, it's very fulfilling.
Got it. Okay. While I tell you the next question, maybe you want to pick up your phone as well. You mentioned the path to profitability. There's a belief that with the focus on merchant subscription services, payment processing, and lending increasing at your firm as well as some of the others, the path to profitability might actually be shorter. You agree?
I've said it also.
You said it also. Okay.
That I think we underestimated, and I can tell you that why did we underestimate? Because in a market where merchant does not pay, government is subventioning the payments, charges to the merchant. Why would merchant pay? And in fact, sales team at one point in time believed that this devices business would not exist, because why would merchant pay? Why would they like to make a business model where they have to pay? Then came this COVID, where if it was 5% or less contribution of payment on the shop, you do not want to discover the reconciliation, the data analytics, the settlements, etc. obligations. You like, okay, 4-5% are what I do. But as soon as it crosses 35 and 40% CASM, you now need on the shop a person whose phone is on the counter, every payment is done, and SMSs are not going to be delivered, you know that, and then inbox will be filled, the phone will be locked on the shop. He said, here is the device. So in the local language, helping shopkeeper take mobile payment to dramatic high is amazing, right? And I want to tell you this again, Neeraj, that we started as company where our ambition was to drive payment in the country. Our ambition was not just that we will be the only one. So if there was a time when Paytm, which was led by wallet and then QR, there was a time when we were asked that would you expand your QR network to the UPI so that everybody participates. We said yes, we would like to do it because we are here to champion mobile payments. We are here to champion inclusion. We are here to champion the byproduct of payment, which is the credit disbursement. So happy to say that we have always remained at the forefront of what small merchants need, small shops need, and then this becomes a industry-wide innovation. So yes, you are right. The dramatic upswing or the upswing in subscription revenues, which we have now even learned next level what shopkeeper will need, is what is the reason that we are going to see when revenue and profitability become better than what we envisaged. And this happened in the last 2 years. That's why even at the time of IPO, if we were to forecast, we would have not.
So unless I understood it very, very wrongly, this 333 mantra that you follow, right? You reckon that the path to profitability is for sure.
Inside it.
Huh?
It's written inside it.
Huh.
It's written inside it. I actually want to tell you, no product marketing should be continuously haggling with the product market fit if you are not fit in 3 years. Let me say this. That's why we have done many businesses, and we are very happy to say that we don't do more businesses than we did earlier, but we just keep pruning.
Okay.
Our commerce business didn't find market fit. I was like, okay, it doesn't matter. Our ticketing business found product market fit. We are all in.
Okay, great. This incentive from the government, 2,600 crores, it's a good thing, but a few people believe that it doesn't cover a wide share of costs. What's your sense?
It covers large share of cost and gives us profit.
You are happy with this? You would have hoped for more?
We are a bank.
You would have hoped for more?
Paytm is a bank. Paytm Bank is the beneficiary directly, runs UPI system directly. Unlike in many cases, banks don't but hand off this to apps on this, and they will keep some so and so. So more, this is 2x of last year.
Yeah, but still, I'm asking because a lot of people believe.
Why would I say less? Why would I say any number is enough? I mean, I'm a businessman. And
No,
at
no.
the same point in time, I would say that is it enough for covering the cost? It's profitable.
The difference between being a rational businessman and being greedy. I'm just wondering whether you
My
believe this
answer
is
is
like,
this is a very good money.
is a very good one.
$325 million is a very good commitment by government. I can tell you no payment network itself will have that kind of commitment. Guess what? In this country, the reason for success of mobile payment is the dramatic commitment of this kind of money from government and incredible support of regulator and championing of NPCI to deliver on those. Oh, and then the whole industry is what it is today. I mean, I cannot tell you I'm happy and elated to say that it is double of last year. And as an industry, I can say that we're very thankful to the cabinet and the set of people who just worked on this, that approved on this. So yeah, this is good.
Okay. Now, from an investor's perspective, 2 or 3 things. One is the path to profitability. 2 is the mixed feedback that came about the buyback decision as well. And 3, the advisors. I mean, for example, there is an IIS report, and I copied some of those things from the note as well, where the advisors have questioned the nature of your role in Paytm, wherein they say that you enjoy the rights of a promoter, but not the responsibilities or restrictions.
I'm not sure what is being said. Everything that is there is a shareholder approved. It's a public shareholding listed company. It's not 2 people deciding.
Yeah. Okay.
I mean, if you remember, there was a time when there was a huge public discussion around voting to get approved for being even CEO. Yeah, that was including my every line item of terms and conditions. So, I mean, I'm sorry to say, ill-timed advice.
No. Okay.
It was advice on that day also, which is what was there. I don't know what this advice constitutes as a today's context.
The threshold for being the chairman, 2.5%, very low, designed to keep you there, while as for the others, it's 10%.
I mean, look, let me tell you one thing. That I have only one license to say this. Everything is very transparently done. Everything is very shareholder voting wise done. So what to say here?
Do large shareholders reach out to you and ask you about why is this that the decision has been taken, or is everybody fairly
I'm sorry
happy?
to say that this is so wrong time that it all was when this voting was happening written. And I don't know what it means to get this again today. Again meaning when there is no event of discussion of this. You see what I'm trying to tell you, Dheeraj, here. I know that this is all advice had come at one point in time, which went to all institutional investors. And let's say this, I remember there was 99.7% kind of vote that happened, which includes the institutional investors who would have anyways reached out and talked about and everything else. I mean, 99.7 is not only a pre or post IPO kind of. So I'm sorry.
Okay.
I have only one question to say, or one answer to give, that everything has been done extremely transparently and clearly in public space, including and not limited to the very appointment.
Okay. Final 2 questions. One is on the excitement around the Government of India initiatives, and I would want you to think of it not from a perspective of a Paytm only, but from a perspective of somebody who's watching this ecosystem. One is ONDC and what it could do. The second is ONEC and what that could do as well. And this whole payments ecosystem has a lot of part to play in the second one.
Yeah.
So please talk about it.
I think, look, let's understand the payment business, which is about bringing the smallest of the shop onto the network, which is digital, or bringing them existent and identified on a map of economy, is sort of a great thing because it brings the heartbeat and identifier of that. Now, the real business is when they do business, they get credit. The business model of Paytm is also, if you notice, practically is that you solve for payment, you extend the enabling the business, enabling the commerce, So payment enable commerce and credit. All these platforms that you're quoting are exactly democratizing that to an even wider level. So that's why we are big supporter of ONDC.
Of course, you would be. Yeah,
We believe that this is an opportunity for India, opportunity for small shops to come up again. I mean, get distributed. If ONDC is successful, which I believe that it'll be a systematically one of the most important platforms in the country. If you were to look at, let's say, payment is a tree, then ONDC is the fruit of it.
What about the other aspect, which is, to my mind, revolutionary in the sense of giving credit based on cash flows and not necessarily on collaterals? How important would that be for the Indian small unorganized merchant ecosystem?
This is the reason that credit has not reached that far and wide. That because those people do not have any asset or some book to show or formal audited numbers to show. Those small shops will inevitably get credit only by payment flow.
Right.
Because otherwise they get credit from loan sharks.
Yeah.
And Paytm's disbursement is exactly that. I mean, the growth that you are seeing here, and hopefully if those lenders whose book that is going in, you're able to ask them the book performance, it's very clear, evident example of that in this country, in our country, the small guy did not get access to credit. His sincerity to pay, his ability to pay was always there. And he needed a solution that would solve for him because he wanted to solve for his access to capital. When he got access to capital, he sincerely is paying back. So in a day, let's say if you are running a street side shop, you got, let's say, 1,000 rupees collection or 700 rupees collection, you can give 100 or 200 rupees a day. So technically, the lender that is working with us is underwriting the future forward receivables because there is no other number that you could have got from that person. And now, because it is digital disbursement and collection, the costs are also so less that we can also make our fees that we get from them, and they can also make the yields that they make on them. And both of us should be happy. That is why the scale is showing up.
Great. Okay. Lovely talking to you today. Thank you so much, Vijay. And have a great remainder. Actually, if there is some remainder left of Davos today.
Thank you. Thank you for having me here.
The pleasure was ours.
Thank you.
Yep. And viewers, thanks for tuning in.